You've been lied to. Santa's real? No, I'm talking about life insurance. What's up everybody, I am Jaspreet Singh and welcome to the Minority Mindset. You ever heard the saying, one person's trash is another person's treasure? Well, that's especially true when it comes to your money. Are you saying that my money's trash? Some people hate the idea of owning real estate while other people have used real estate to get rich. Some people hate the idea of the stock market while other people have used the stock market to build insane amounts of wealth. And some people get completely screwed over with life insurance while other people know how to use life insurance the right way. That's why today I'm going to be going over the 7 biggest myths, lies, wrongs you've been told about life insurance. But before I get into that, make sure you hit that thumbs up button below and subscribe to the Minority Mindset YouTube channel. That way you don't miss our new financial education videos every single week, and hit that little notification bell too, otherwise YouTube won't let you know when our new videos are released. Myth number 1. All life insurance is the same. Wrong. You have term life insurance, whole life insurance, universal life insurance, variable life insurance, variable universal life insurance, fixed expense insurance. You get the idea. And to keep things simple, I'm going to be focusing in on term life insurance and whole life insurance today. The way term life insurance works is this. You buy a short-term life insurance policy. It might be for a period of 10 years or 20 years or 30 years or whatever. You get to pick the term, but you buy the short-term policy and then you are going to pay your life insurance company every single month. And then if you die within that term, so if you buy a 30-year term policy and you die within those 30 years, your family will get a big check. If you don't die within that term, you and your family get nothing. With whole life insurance, you are going to pay into this life insurance policy for the rest of your life, whether you live for another 5 years or another 85 years. It doesn't matter. You're going to make a payment to your life insurance company every single month until you die, and then when you die, your family is going to get a big check. And this brings me to myth number 2. Whole life insurance is better because your family gets a guaranteed check. Wrong. If you know how to use your money. If you are a healthy 30-year-old guy and you want a $1 million life insurance policy, you could get a term life insurance policy for $1 million for under $30 a month at the time of me recording this video. But if you wanted a whole life insurance policy, which means you get a guaranteed payout, well, now you're not going to be paying $30 a month. You'll be paying something closer to $850 a month for the same $1 million policy. With whole life insurance, it's so much more expensive because you are asking your life insurance company to take this money and invest it for you because you want them. You're asking them, you're telling them to pay your family money when you die. And this brings me to myth number 3. Life insurance is a great investment. Wrong. Life insurance is a great risk management strategy, but it's not a great investment. When you tell your life insurance company, hey, I need you to give my family a $1 million check when I die, which is what you get with a whole life insurance policy, they look at you and then they start calculating. According to my numbers, you have another 50 years to live. Wait, is that a Big Mac? 45 years. If they think you have another 50 years to live, then they start calculating, okay, you're gonna have to pay us $800 or $850 a month or whatever for the rest of your life, which we think will be another 50 years. And then that investment has to pay us enough to pay our financial advisors, our brokers, make a profit, and then have enough money to give your family $1 million. That might explain why, according to Consumer Reports, the average return, remember average, on a whole life insurance policy is a whole 1.5% a year. Oh. Life insurance does a great job as a risk management strategy because if you unexpectedly die 3 years from now while you're building your wealth, your family won't have to struggle financially and worry about how they're going to pay their bills. And if you understand money and investing, you can beat the life insurance returns. I would much rather you take this short-term life insurance policy for 10 years, 20 years, 30 years, whatever you need to build your wealth, and then take this difference, this $800 or whatever it is, and invest it into assets and investments. Stocks, real estate, your own business, because these things that you're investing in, these assets, are things you own and you control. You can get a better return. You can use this money while you're alive to live a better lifestyle today. and you could get even better tax breaks. Myth number 4, life insurance is a wealth building tool. This myth is great. Many people will try to sell you on the idea that you can use your life insurance to build wealth because A, you can strategically use your whole life insurance plan to build your savings, or B, you can strategically use your whole life insurance to invest tax-free. Let's start by talking about building a savings with your whole life insurance plan. When you pay this $850 a month for your whole life insurance plan, some of this money goes to your life insurance, which is the money that your family gets when you die, which is called the death benefit, and the other portion goes into what's called the cash value portion of your life insurance, which is essentially like your strategic savings account through your life insurance, actually through your whole life insurance, because your term life insurance doesn't have this cash value part. This cash value part sounds really cool because this money that you're investing and paying into with your whole life insurance gets saved with your life insurance company, and then your life insurance company gets to invest this cash value portion and it gets to grow tax-free, and your term life insurance policy doesn't have that. Tax-free? That sounds amazing! But here's what people don't tell you. A, if you don't use this cash value when you're alive, many times the savings and investment you've been building up gets donated to your life insurance company, because remember, your family is only getting this death benefit, and so many times insurance companies will take this cash value and keep it for themselves if you don't use it. B, using this cash value that you saved up and your savings and your investments that you've been building isn't so easy. You can't just walk into a bank and say, hey, I'd like to withdraw my $100. I mean, you can borrow against this cash value. These are savings and investments that you've been building up and growing, and so you can take a loan out against it. But you have to pay this money back plus interest to your life insurance company to borrow your own money. And if you don't pay that interest, don't worry. Your life insurance company will just reduce the death benefit or the big check that they're going to give your family when you die. C, if you get a whole life insurance plan and you've been paying into it for 5 years, 10 years, and then you decide, this isn't the best plan for me, and you want to get out of your whole life insurance plan, well, all this money you've been saving and investing into your plan gets forfeited. I mean, they give you something called a surrender value, but the savings and investing that you've been building gets donated to charity. And by charity, I mean your life insurance company. And in case you were thinking, I'm not going to be one of those people that stop paying my whole life insurance plan, just know that according to the Society of Actuaries, almost half or 45% of whole life insurance policy holders surrender their policy within the first 10 years. Maybe it's because people realize it's not worth the money. I don't know. And D, the returns on your whole life insurance policy suck, like we just talked about. So yeah, you might be building up the savings and investment account that you think is growing tax-free, but the returns suck. It's very hard to access. If you stop paying into it, you lose it. And if you don't use it, you might lose it still. If instead of paying $850 a month for your whole life insurance policy, you bought a term life insurance policy paying something around $30 a month, and you took the remainder, let's just say $800 a month, and you invested it yourself in the stock market, real estate, whatever, and you just got an average return of 7% a year, and you did this for the next 50 years, which is how long you expected to live, well, now your investments will be worth over $4 million, and that's just an average return. If you did worse than average and you only got a 4% annual return, you'll still have an investment account worth over $1.5 million. And the best part is, let's say year 25 life happens and you couldn't invest any money into your investments. You didn't invest any money year 25, maybe year 26 too. You didn't invest any money into it. Your assets, your investments don't disappear. You still own them, and chances are they were still growing in value and building you wealth, and you don't have to sacrifice it, and you can use this money. These might be paying you dividends to live a better lifestyle today. Not to mention, if your goal is growing your money tax-free, you have the ability to do that if you take this money and invest it into an asset like real estate, and now you have control over your money, you can use your money while you're alive, and you can get better tax breaks. And I know this because, well, I'm a licensed attorney. This is gonna make a lot of people upset, but whole life insurance give insurance companies a windfall. They were not made for people who understand money and who understand how to invest their money. Myth number 5, you have to deal with pushy life insurance people. Do you wanna know why life insurance people love pushing whole life insurance? There are 2 reasons. The first reason is because most people are not disciplined enough with their money to do what I just said. Buy term life insurance and invest the rest into something that will pay you with better returns. So whole life insurance forces people to invest their money, which is better than not investing their money, even though whole life insurance returns aren't that great. And the second reason is because the commissions on whole life insurance are, well, huge. But now, thanks to the internet, getting life insurance and getting a good life insurance policy is a lot easier than you might think. Thanks to our sponsor Policygenius, you can just go online and they will make insurance companies fight for you, and it doesn't cost anything to use them. All you have to do is go onto their website, enter in a few pieces of information, which just takes a couple minutes, and then Policygenius will show you a bunch of different quotes from different life insurance companies. This way, you can be sure you're getting the best price and the best deal so you can save the most money and keep it in your pocket. And if you need help or if you have questions about life insurance, they have unbiased experts you can talk to who are not incentivized to upsell you anything. This way, you can be sure you're getting the best policy for your lifestyle. And you won't have to worry about people trying to shove the most expensive policy down your throat. Policygenius is completely free to use. So if you want to get a free life insurance quote in just a few minutes online, I got the links to where you can do that in the description below. Minority Mindset is a partner with Policygenius, so if you use them, we will get compensated, but there's no additional cost to you. I mean, they're completely free to use. So if you want to learn more and see how much life insurance will cost you, I got the link to where you can do that in the description below. Myth number 6. Everybody needs life insurance. I hate seeing GoFundMe funerals. A GoFundMe funeral is when somebody unexpectedly dies and they didn't have a plan for their family. They didn't have assets, investments, or life insurance to take care of their family if they unexpectedly died. And so the family needs to put together a GoFundMe page to raise money for funeral expenses and living expenses and everything in between. It breaks my heart seeing things like this, and you don't want your family to ever be in that situation, which is why some sort of life insurance is so important. But unlike what the majority of people say, your goal shouldn't be to rely on life insurance to take care of your family. If you have the minority mindset, which means you think different than the majority of people when it comes to your money, your goal is to be self-sufficient, which means you have enough assets and investments to take care of your family. Once you have built up enough assets or enough investments to live your life and pay your expenses, and you don't have any consumer debt left, well, now you're free. You don't need life insurance to take care of your family because you have assets there that are already taking care of your family. If you happen to die tomorrow, your family would be financially okay. For most people, that means you need a net worth of $5 million and no consumer debt. If you don't have that yet, no problem. Use term life insurance for as long as you need and use the extra money to build up your assets and your wealth this way you can take care of your family. That's what financial education is all about, and that's what we talk about on our channel. And myth number 7. You can't qualify for life insurance. I've heard this expressed in a couple ways. One way is people in their 20s say, oh, I'm too young to qualify for life insurance. And other people say, oh, I have this health condition, so I can't get life insurance. Look, if you're young in your 20s, especially if you have any sort of debt, and especially if you have any sort of co-signers on that debt, you need life insurance, because if you die, your debt doesn't just go away, especially if you have a co-signer on it. Your co-signer is going to be held responsible, and so your life insurance can help take care of that burden. I hope life insurance is something you never have to use, but it's better to plan financially so you can save your family that hardship. And even if you have health conditions, you can still qualify for life insurance, and Policygenius can show you how without paying an arm and a leg for your life insurance. Again, if you want to learn more, I got the links in the description below. Thank you for watching. If you enjoyed this video, share it with one friend. That way we can help spread the word. I hope you enjoyed learning more about my thoughts on whole life insurance, term life insurance, and life insurance in general. And if you want to learn more about how you can start investing, especially investing your first $1,000, I already made a video on it, and you can watch it by clicking this button right there. Thank you for watching, and as always, keep hustling.